Hey guys, Steve here with the weekend update for Saturday, August 23rd, 2014. Basically, the market did exactly what I didn't expect it to do. Basically came off these lows at the beginning of August and has rallied, nonstop since to break out to new highs. I really thought from the last weekend or from the last stock market outlook video that, if we did test these highs that we would consolidate, in this, say, 1980 and to 1950 area before we'd break out. So obviously that's why we trade off of price action and not predictions. I'm going to obviously put together another video for tomorrow night for the stock market outlook. So I hope you guys join in and watch that, and we'll go over the ES, the NQs, and the YM and the TF. So the SPY, NASDAQ, Dow, and Russell futures. Couple of trades that would have triggered on Friday. First one was Green Mountain Coffee Roaster, or whatever they call it now, Keurig Green Mountain. So basically gapped up. This is a professional gap, because basically where it gapped to was a resistance area, and then it went. So a gap and go. If you're going to enter, I think your stop still needs to be down here at this 113, which would put us below the 50-day, below this low, and then below the trend line. But we're not going to be taking too many positions in the foreseeable future for the model portfolio because we are utilizing a large majority of our margin. And if you go and take a look at the model portfolio, you'll see that I think there's 11 of 12 trades are positive for about $5,700. And on the performance tab, I've also added a benchmark for the SPY, just to show how we're performing against the SPY. Obviously, I know it's not the best benchmark we could be using because, we have kind of other costs that are incurred, such as margin cost and commissions and everything like that. But, it's good to at least see where you stand. The other trade that possibly would have entered was Macy's. This one, again, nice breakout from this weekly consolidation. I think your stop would have to be down here at this 56.50 level, and then go from there. But neither of those positions we are taking for the model portfolio. So let's go ahead and take a look at the positions we're in. Again, we're in 12 positions, as you can see here on the left. Apple, we're really just consolidating at the highs, pushing to new highs. I think where we're at now is indicative of how strong the market's been. I like the move on Friday. Stop is still down here 94.30. Until we test that level or put in a higher low, you just sit on your hands with Apple and let it work. ADM kind of coming back and testing, potentially wants to test this trend line or the 50-day moving average. Could also want to test the top of this gap at 48.20. For right now, ADM stop 46.38. AMT, I think maybe we were going to sit in here and consolidate below this $100 level, between 100 and let's see, 96.50. I think that's a good spot to consolidate. Let this trend line catch up. Let the moving average catch up. This way we can kind of move sideways, similar to what we did here. Get a bounce and then get a nice run. I think for right now, if we were to break out over 100, it might be a failed breakout. Stop on AMT is 92. APD, we talked about how it was putting in what looked like a rounded bottom. Well, now it looks like that, maybe it wants to go back and test this 131 level. Our stop right now in APD is still around this 128.65. Next stop level would be the 131 level. Once we can start getting a move above 136, I think that would be a critical area that we would have to exceed before we'd be able to move that stop up. Disney's been on a tear since we entered. Nice tight setup. If you look at the weekly, the daily, everything lined up very nicely. We had the breakout. We entered, and sure enough, we're about $3 higher than our entry price. So, our stop still down here at this 85 level. I really don't see another place that we would be able to move it until we can maybe put in some consolidation or put in a low and, have something that's easily identifiable. EQR, we moved our stop up this week to the 64 level. basically came out, broke out again. Now it looks like we're testing this breakout. 50-day and trend line are matching up fairly nicely. So right now, I think if we broke that 64 level, that would be a good indication that the trend is changing on us. Expedia, broke out, and really it's just consolidated since it broke out. At this point, there's no resistance ahead. Blue sky territory, we call it. And, we have a dividend coming up on the 25th, so it'll go ex-dividend on the 25th. We'll get a little bit of a bump there. Again, I'm not 100% sure. I have to check. I don't think the Thinkorswim paper money actually accounts for any dividends, because I know it doesn't account for any margin interest. So I think it's the similar with the dividends. But, that's another aspect that I'm not really keeping track of. But it is another aspect of the gains that we are making, especially on these stocks that we've been in for 30 to 45 days already. Fidelity broke out, sitting at basically at the breakout level. We were able to move our stop to that 54.86 last week. So for right now, Fidelity, just let it work, see what happens. Again, I don't see another stop level that we would be able to move to. At this point, I'd like to see some more upside before we move any stops. H&R Block, we entered off of this consolidation down here and the break of this downtrend line. So I think our actual entry was, I don't remember if it was the 8th or the 9th. I think actually this was the trigger and this is the entry, the 12th. Anyway, we're still above that level. We now broke out above this resistance point. So for right now, again, blue sky territory. Stop was moved last week to the 32 level. Next potential stop that I see would be right in here at 32.90. But again, we'd have to see some more upside, allow that 50-day moving average to continue higher. Love, Southwest Air. So basically, since our breakout, it hasn't looked back. All right, it's basically off to the races here. I think 27.50 is a good stop level. I don't know if we were able to catch this. It looks like we did catch this ex-dividend date. So we should be, again, another dividend coming our way. RSG, really just moving up since we entered. Similar to Love and Diz. I think those are ones that we want to, that's the point of being long the strongest stocks. All right, we are going to move our stop to 37.50 from 36.84. That represents this small consolidation area right in here. All right, that represents that low. So I think at that point, we also would break the 50-day moving average and this trend line, which the stock has not done since, way back from February. That was the last time it was below the 50-day moving average. So I think if we were started to trade below the 50-day moving average again, then that would be a sign that the trend has ended and it's time for us to go. And the last one being Tesoro. We entered this. Again, I don't think this big tail is really what happened. I don't think it ever traded down to the 61 level. But nonetheless, we basically traded and closed right back in the range of, the last 3 or 4 days. So for right now, Tesoro, the stop is 59.08. We did move it from 57.43, again with the same idea as RSG, where we haven't traded below the 50-day moving average since April. We had that one little day here, but again, I think if we started to trade below the 50-day moving average and below this little consolidation area, that would be a sign that our time has come and we're time to take an exit on that trade. All right, so let's take a look at the watch list. I think I said it earlier in this video, but I was very strict, I guess, on what I was considering a trade, just because of where we are in the portfolio. Again, we're not going to be taking too many trades that I can foresee in the foreseeable future, at least not, I don't think we're going to be taking much this week. But, nonetheless, if you haven't been following along, these are a couple trades that, maybe you want to take on your own, maybe not, but, I still want to continue to go through the process. So ABT, basically I just identified the resistance, the support. You can see on the weekly chart we're breaking out from this consolidation on the weekly, have a nice trend line going higher, support, resistance, trend line. So I think if we got a break over 43.10, we'd be able to set a stop right around here at 41.50. AIV, I think this was on our list once before, but I'm looking at the trend line right through there, and now this being another consolidation. So similar to the couple trades like in Broadcom and Disney and those nice tight consolidations along a trend line, that's my bread and butter setup, and those are the ones that I want to take. This is one that looks very similar to that. So again, 34.27 would be the breakout and a stop below 33.10. APA, been on our list for a couple weeks, looking for that breakout over 103.40. APC, another one that's been on the list, similar setup, looking for that breakout over 112. Broadcom, again, similar setup to what I just identified in AIV. We're starting to get that breakout, so I would like to just see a little bit more, upside. This kind of, to me, seems like it limped out of the gate a little bit. I want to see that nice definitive big green bar breakout, and then you would be able to set your stop here at this 36.60 level. BXP, basically the same thing. I mean, it did break out, but it wasn't really, I would say, with force. So I'd like to see that with force, and then I think our stop would probably be 117.30. CVS, one that I own personally, has been in this consolidation, really just consolidating right now, right above that resistance. So again, I'd like to see that breakout over 80. Dow, been on our list. We're looking for that breakout over 54.15. I think that would be a good trigger to get long Dow. DPS, I think this was on our list last week, but again, looking for that breakout over 61.75. And I'm going through these quickly, guys, because we've done it, and if this is new to you, definitely take a look at last week's video, because a lot of these were on from last week. But basically what we're doing is identifying support, identifying resistance, identifying the trend line, and then just setting an alert for when the stock breaks out over the resistance level, and that at least puts it on our radar, and then we could determine where exactly we want to enter. I never went over that one, did I? Estee Lauder. So right in here, this is a consolidation area, this gray box. So we're going to just take that, extend that through, and then this area up here is the support, and this is the resistance. We're going to go over this more in detail in the trade school video this week. And then this is your trend line. Okay, so this is how we identify a potential stock trade. We look at the weekly, we look at the daily, we identify these levels, and then we just wait for a breakout, meaning that the price closes above a certain level, and then we're able to determine if we want to take an entry or not. I still didn't go over that one. So this one, 77, would be our breakout level. So we'd want to see a breakout over 77, and then we'd be able to set our stop at 73, which would be the area that we know we're wrong and we want to limit our losses. HCP, again, very similar to Estee Lauder. It's been moving sideways for a while. All right, so breakout over 42.50 would be the entry point. Now Home Depot, this one's I put it on the watch list because we've talked about this before, and I want to show you. Look at the consolidation that it's had on the weekly chart. Okay, so these can typically lead to some very substantial gains. You turn around and 6 months down the line, you identify these levels as the triggers for the start of a nice trend. So this one is nowhere near any type of entry for us. We possibly could have looked at it back in here, something along those lines, and waited for a breakout over 82 to set our stop at 75. We didn't see that. We missed it. Whatever the case is, but right now extremely like this pattern. This is an extremely good looking pattern, especially from where it came from. I mean, look at Home Depot back from September of 2011, and the stock was trading at $30 and it's at $90 now, and it consolidated for the last year in this range. So essentially from 30 to 70 in a matter of a year on this trend line. That's very possible that they could have that kind of percent return after this breakout. So it's on the list. We're going to try and identify, maybe this consolidates, maybe it comes back, consolidates, but this is just one that is on the list because of the weekly chart. But it's at nowhere near an entry. We're just have it on the list so we don't miss it. Hess, this has been on the list for a while, over the $100. This is kind of similar to what I'm looking for, I think it was AMT to do. Just consolidate between that $100 level, that 95 level, move sideways, and then break out. I think that would be a very good setup for us. JWN, this one, had earnings, dipped down below, is now back in the range. So I actually looked at UMP, which came off my radar, but I'm looking at it as almost the same kind of setup. All right, that it came down below and now it's going to break out higher. Unfortunately, we missed UMP. I don't want the same thing to happen with JWN. I do like the pattern, so if we can start getting a close over 70.25, I think that's a great entry. Kroger moving sideways, 50.90 would be a good spot to get long that. LRCX, again, really just looking at this consolidation area in here. Here's your breakout level, 72.30. Here's your stop level, 67.81. And your trend line right through there. Okay? So when you draw a trend line, like I said, I usually like to have it connect in 3 spots. So 1, 2, 3, road along it, breaking out. So I think if we were able to get over 72.30, we could set a stop down here, 67.81, and that would break 50-day moving average, trend line support, and previous lows. All of our criteria for setting a stop. MCK, this one's a little sloppy, but I think over 195, that's a good spot to get long, and we'd be able to set a stop at 186. MJN, Mead Johnson, again, over, wrong tool, over that 96.30, under 91.50 would be the stop. National Oil of Varco, this was a similar setup to H&R Block that we talked about. We had this breakout from this consolidation right around the trend line. So if you did get long, that's great. If not, the next spot to do so would be over 86.16 with a stop here under 80. Nvidia, we've had this on the list for a couple weeks. It came off last week, now it's back on. But we're essentially in this nice long weekly consolidation. So what I would expect from Nvidia would be a breakout over 191. I'm sorry, 1973. So say over 20. I would expect it at that point to then consolidate a little bit on the daily chart, set up a new box, and then another breakout higher to confirm that breakout. PSX, really sitting at the top of the box. I'm looking at this 86.60 as the level it needs to be broken out from, and you could potentially either set your stop down here at 79 or 80.52. A couple more. Schwab breaking out. Again, we were kind of looking at these levels through here, right? And here was the close. Here was resistance. So again, I think it needs a little bit more upside, maybe over 29. And then you could set your stop now, probably adjust it to that 27.14. So there's our new support and resistance. And we can just activate this and slide this over. And there's your new box. Okay. Sealed Air, that should be off the list. That one broke out last week. SPG, same thing, still in that range that we've talked about. 171. And I think our new stop would be this 165. All right, so different ways to do things as far as where you set your stops, depending on how conservative you want to be. But in the same respect, at the end of the day, you're identifying support and resistance levels, and you're identifying areas where you're going to be wrong if the trade goes against you. Now, VF Corp, we kind of identified last week or the week before. It was on the list, then it was not on the list, and now it's back on the list. So we had identified this downtrend line, basically came back down to the 60-50, tested that, and now we're right back at resistance. So I think, again, if we broke out over 63.85, your stop level would be this 60.86. And this is what I was talking about with something like RSG, and I think there was one other one. I forget which one it was. But where I'd like to see, as much as you don't want to see it, I'd like to see some kind of pullback in some of these stocks to identify stop levels. All right, to run up and say, oh, well, this looks like a good stop level. Well, then you'd be stopped out only to watch it go higher. So I'd like to see those stop levels come in, really define themselves like it did here, double bottom as far as I'm concerned, right in this 60-50 level, which was the same as back here. And now it's breaking out. So now if it breaks out, I know for a fact 60-50 needs to hold. And if it doesn't, then I'm going to step aside and move and find a new trade. But that's how you're going to become more profitable. Is really, you'll be surprised. You're probably 75% of the way there with the technical analysis. It's more about the psychology part that you do have to learn to give some gains back. You're not going to keep everything that you make. And you have to kind of just accept that and try not to outsmart or micromanage the stock, because it'll find a way to bite you every time. WDC, again, another great looking setup over 102. I think is a great entry and a nice tight stop here at 97. But you see what's happened here. This was on a nice tear. All right, but look at how far extended it got from the 50-day moving average. We talked about this last week. So now what has it done? It's moved sideways, and as it's moved sideways, that 50-day moving average continues to creep up, and before you know it, that 50-day moving average is going to be over $98. So when you break out now over 102, you can have a stop right here, 98, which will also be below the 50-day moving average. So it's just a way of kind of working off some excessive buying. Doesn't necessarily have to pull back, but consolidation works just as well to bring the technical picture into focus. And same thing here. I mean, this is exactly the same as WDC. This is WMB. It got extremely extended from the 50-day moving average. All right. What did it do? It went sideways, worked sideways, and then eventually just came back, tested the 50-day, and now it looks like it's ready to break out. So again, if we got a breakout in WMB, I think our stop level would be here at this 54.37. Okay, so that's exactly what I'm looking for some of our stocks to do, and that's exactly what a lot of strong stocks do. They basically work off their overbought conditions by moving sideways instead of pulling back. So with that said, guys, I hope this helps for this coming week. Definitely check out the morning videos, the educational videos I'll be putting out. And, we'll be having our strategy sessions as normal every night, Monday through Thursday. And then we'll enjoy a nice 3-day weekend. So last weekend of the summer, I hope you guys are enjoying it. If you haven't already, please follow me on StockTwits, Twitter, Google+, subscribe to the YouTube channel, and subscribe to the free nightly recap on the website. With that said, have a great rest of the weekend, and we'll see you Monday.